So we had a pretty bad market today. It's kind of been bad for the last little bit. It's been up and down quite a bit. Lots of dips. Today, oof, man, it really dipped, and it's getting a lot of investors afraid for long term, especially when you start to see like Japanese markets dropping and such. I'm going to read this article here. This is the Washington Post, so take it with a grain of salt. At least with the Washington Post for an article like this, they're not exactly going to throw in a lot of rhetoric and narrative. They're just going to kind of tell you a little bit more of the information. So let's see what they have to say. So the Dow sinks more than 1,000 points in global market sell-off. Global markets slid Monday as fears of a slowing U.S. economy sparked investor angst, resulting in some of the most intense volatility Wall Street has seen in years. Investors were rattled with a trickle of disappointing economic data, including last week's jobs report, which saw the U.S. unemployment rate rise to 4.3%. The Dow Jones Industrial Average shed nearly 1,034 points, or 2.6%, to close at 38,703. The broader S&P 500 erased 3%, while the tech-savvy NASDAQ lost 3.4%, as wariness around AI led investors to turn away from big names such as NVIDIA and Microsoft. Okay, so here's some of the dip showing. So the Wall Street turbulence followed unease in overseas trading that sent Japan's benchmark Nikkei 225 index to its biggest single-day drop on record. Cryptocurrencies also plunged, with Bitcoin moving nearly 11% lower. Analysts said the sell-off is a reaction to worrisome economic data last week that moved the Nasdaq into correction territory on Friday after nearly a year of gains. Adding to the volatility is a spate of bad financial results from the tech sector and currency gyrations abroad. Still, even with the recent losses, the three major U.S. indexes remain positive for the year. So you can see they're still up over the year, but not where they were, obviously. But if they continue to drop, that's a problem. We got a threefold fear: manufacturing data that was poor, labor market data that was weaker than expected, and a Fed that seemingly won't be here to help us until September, which feels like an eternity away, said Liz Young-Thomas, head of investment strategy at SoFi. What she's talking about there, as far as the Fed not being there, is Congress being out of session until September, I think it's September 9th or something like that. Pathetic, but whatever. They got to take summer off. I guess they're like teachers. Monday's decline started in Asia, where rising interest rates also have spooked investors. Nikkei plummeted 12.4%, or more than 4,451 points, to 31,458. The index has slid by more than 20% since last month, after reaching all-time highs over 42,000 in July. We will match the market trends with a sense of urgency and take all possible measures to manage the economy and finances, Japan's chief cabinet secretary said during his regular news conference Monday. Grim numbers were reported across the region. South Korea's Kospi index dropped by 8.77%, Taiwan's index 8.35%, Hong Kong's Seng index was down 1.46%, and China's Shanghai Composite Stock Market Index by 1.54%. And Australia's S&P ASX 200 slid by 3.7%. So you can see it's like a global market drop. But we live in a global market at this point right now. So if the U.S. economy starts to tank, other economies are going to kind of tank, because obviously they're holding a ton of U.S. dollars. And so their economies are directly connected with the U.S. economy, right? So we are a global market at this point, like it or not. European markets followed suit. London's FTSE 100 dropped more than 2%, hitting its lowest in more than 3 months, and shares of European tech and semiconductor stocks also plunged. The volatility was rooted in several data reports that appeared to show weakness in the U.S. economy. On Friday, the Labor Department reported the nation's unemployment rate had leaped to 4.3%, which is funny because it says it leaped to that, but I suspect that those numbers are they're always messed with, so you can't really trust those numbers 100%. Kind of until like the ships come back to harbor, right? Where they have to say something. And I think at this point, that's kind of what's happening, right? Where they were before, during, the heart of the presidency, they were kind of just saying, well, no, we're okay. And now they've kind of got to be honest about what the real unemployment numbers are. With employers adding 114,000 jobs in July, weaker than expected showing. On Thursday, another report showed more Americans filing initial unemployment claims, a widely A widely followed proxy for layoffs and a gauge of the manufacturing sector also raised concerns. Okay, so anyways, yeah, I don't know if we're actually in the start of a recession, but this is kind of how they start, right? This could be a problem, but you can kind of see. I mean, we have to wait till tomorrow and Wednesday and see what happens as far as the market. If we have a little bit of a correction up. Sometimes I think some of this is is artificially bolstered, right? So the fat cats that are controlling the market with a lot of manipulation will do this to drive the prices down, so they can have a big buying, big whatever, big buying fest at a low, and then drive up the price over a couple of days, have a sell off, and then just keep that yo-yo going. So I guess we'll have to see.